There is a visible difference between a luxury car and a common car, and we can rightfully imagine there may be a difference in the way these are insured. We have met with Ashley Cole, head of motor at Hiscox, who tells us a bit more about high net worth insurance.
High net worth motor offering is very different to the standard market offering, in as much as it's more of a lifestyle policy, essentially for those that really do value coverage over price, essentially. We give covers that you don't get on the standard market. For example, agreed value on every car. We give pretty much open driving. We give comprehensive driving other cars. And of course, we'd expect our customers to be put into a courtesy car that is similar to the car that's involved in the accident as well. So for me, high net worth, sold correctly by brokers, is their answer to the direct market that has essentially commoditized motor insurance by the, purely selling on price on the television and the radio. So it's really giving something to be sold for our brokers to sell insurance on, other than price. So first of all, if a customer has a household insurance with us, we will insure whatever cars they have. If we're looking to just insure their portfolio of cars without the household, that's when we ask them to have at least one car that had a price new over 30,000. And the reason for that, it just simply helps with our risk selection. We want to make sure we get the cases and the accounts through the door that we're going to be more likely to be price competitive on, essentially, in terms of what we're offering. Typically, a customer would have a nice Mercedes and a nice a decent BMW, and then there'll be something in the garage. It'll be a Ferrari or an Aston Martin or a convertible Bentley, something like that. That's typical. So 3-car, 2-driver scenario. That's pretty much the typical sort of makeup we would get. But then, of course, we do get customers that might have 30 cars. We've always traded through brokers on our private clients product, but owing to the complexity of the cover that we're giving and the type of policy that we are actually writing, it's imperative that we do talk to brokers rather than go direct, to make sure that we are getting all the information up front, and we're relying on a broker to be our eyes and ears for us as well. Quite often they'll have a relationship with the broker and know far much more about that customer than perhaps we could ever find out if you went direct. So we could never offer what we do in terms of the breadth of the coverage by going through a direct channel.